As we've just been listening, some good, some bad in this earnings report, which probably explains why you've got a neutral rating with a 12-month price target of $140. But you were just telling me in the ad break that you've had this price target for about 4 to 5 years. What makes you think that it's going to reach it now?
Well, look, IBM has a systematic problem. 70% of the revenue base continues to be generated from what we call legacy-based revenues, both in software and services. And a lot of those revenues are going to be delivered in a very different way down the road, using cloud, using software as a service, using automation. And that has gradually been cannibalizing that 70% revenue base. It is offset by a growing part of the business, part of what we call cognitive or SMAC, social, mobile, analytics, and cloud, and that business is growing. So I think this is really the dynamics of a very, very slow-moving process where you're shifting the mix more towards the higher growth business. If you look at the stock performance during the past 4 to 5 years, you will probably see that the stock trended anywhere between 120 to 140 within that price target. The problem here is that the numbers have been very inconsistent. You barely see revenue growth. I'm talking about organic revenue growth. Margin performance continues to be inconsistent. And we don't know if the new structure that the company announced is going to change that dynamic down the road, basically.
What about dividend payout? Because in the earnings call, I believe CEO Arvind Krishna highlighted, based on investor feedback, that they were looking at increasing their dividend, growing it essentially. And I looked at the company's free cash flow balance, which is coming at $1.1 billion versus consensus expectations of $2.2 billion. Could that be a lure if they look at paying out higher dividends?
No, I think that look, the company generates a pretty decent amount of free cash flows every year. Deploying cash, returning cash to shareholders, I think is a positive thing. But in the long run, it's really going to be about how the company kind of repositions itself post a spinoff. The management did suggest that post a spinoff, revenue growth will be somewhere between 3 to 5%. We believe they have a lot of work to get to those numbers. And I think they do have to invest in innovation, in products. So there's a lot of work that they need to do to stay relevant or to become relevant again in front of their enterprise customer base.